In the books of, the name is Great Punjab Hotel. We have there's no trading account because it's already prepared. Profit and loss account for the year ended 31st March 1996. Okay. So besides this, we also prepare the profit and loss appropriation account. Profit and loss appropriation account for the year ended 31st March. Then we have partners current account. I told you why it's current account and not capital account, because if there's current accounts and capital accounts, the capital remains fixed. All the payments are made to the current account. If there is no current account, which we're going to do another problem like that, all the adjustments are made to the capital account. So this is going to be partners current account, partners current account. Instead of putting X and Y here, I will instead of putting amount, I will put X and Y. And then we have the balance sheet as on 31st March 1996. Okay, so let's start transferring the items. So capitals X and Y, this goes directly in the balance sheet. The capitals do not change, they remain fixed. Capital X is 35,000 and Y is 30,000. So this total capitals come to, you can show both outside also in the outer column, come to 65,000. Next we have drawings, okay, 2,000 and 4,000. Now just before I go to drawings, I would like to transfer these balances to the current account. If you check here, the current accounts of X, the current account of X shows a debit balance, okay. So coming to that, where's the current account? 2, I will show it since the debit balance, it will be 2 balance brought down. The amount is 250 and Y is a credit balance. Y is a credit balance. If you see Y's account, it is 100. Okay, Y's account, it is 100. So it will be by balance brought down. Also, why I skipped drawings and went to this first is, if always show the opening balance as the first item. Okay, and then do everything, and then closing balance should always be the last item. So even if you come across drawings before current accounts, you can leave a line and transfer the drawings, or you can write down the current accounts first and then transfer the drawings. Okay. Now we will go to drawings. Where will drawings come? X is 2,000, Y is 4,000. Drawings also will come in the partners account. Normally drawings we would have minus from capital under sole proprietorship. But here I said all the adjustments connected with the partners are made in the partners current account. Now, drawings is basically an amount withdrawn by the partners from the business, which they need to repay at some point of time, or is adjusted from their balances, is adjusted from their share of profit or any payments paid to them. So, will the drawings show come on the debit side or the credit side? First, there's already a hint that the drawings are showing a debit balance. So, will they come on the debit side here or on the credit side? Where will they come? Where will the drawings come? The drawings are showing a debit balance. How can they come on the credit side, Nevin? Okay, let's understand it further. Okay, let's look at it this way. So, for example, for Y, okay, they have a balance of 100 rupees They have a hundred balance of 100 rupees. Okay. Say suppose the drawings were 20 rupees. Forget about this big amount. Say suppose the drawings were 20 rupees. Would these drawings reduce their balance or would it increase the balance? Would these drawings reduce this drawings of 20 rupees? Say Y's current account, like you can see, is 100 rupees. He had drawings of 20 rupees. Would these drawings make it 120 or would these drawings make it 80? Yes, it would make it 80. And you can also look at it. When you take drawings here, okay, you show it, say, suppose you were doing a sole proprietorship, you actually minus the drawings. And when minus the drawings, what happens? It reduces the capital. Similarly, drawings here will reduce the balances. The drawings here will reduce the balances. Here, this guy already has a debit balance, so drawings will further increase it because it's a debit balance. It's a withdrawal for the partner. It's not an income from the partner. It's a withdrawal for the partner, which a partner may have to pay back, or it's like I said, it's adjusted from their share of profit or the any other payments made to them. So drawings, it's a debit balance. If you see the problem, always drawings will always be a debit balance. There cannot be anything other way. And it's a debit balance, and hence it has to be shown on the debit side of the partner's current account. So I will show it as two drawings. The amounts are 2000 and 4000. 2000 and 4000. If something is not clear, please stop me and you can ask your question. Something needs to be explained again. Okay, these are very important things, not only from these point of view of these problems, but just to understand this in terms of accounting, how it is treated, why it is treated in a particular way. Okay. Next one, trading account. Now we've already decided that this is the gross profit since it's showing the credit balance. If it was this side, if it was showing a debit balance, it would have been a gross loss. Okay. So it's trading account 6790. So the trading account has already been prepared. This is the balance from it by trading account. In brackets, just for you to understand, I will put it as gross profit 6790. Next, we have salaries 22,760. There is an adjustment also to this, so I will have to write it in the inner column. Two salaries 22,760. Then there is deposits advance booking 750. We already discussed this is a liability, so directly in the balance sheet. Leave two lines for the current accounts and write this. The amount is 750. Then we have creditors 4330. Creditors. Then there is lighting 4840. Leave a line for outstanding salaries. Then there is leasehold premises 50,000 in the balance sheet in a column because there's depreciation. Then cash at bank 22,710, cash in hand 330. Leave a line for the other fixed assets 1, 2, 3, 4. Cash at bank 22,710 and cash in hand is 330. Repairs and replacements 1870. Again an expense. Then there is China, cutlery and linen, 4,500. There's furniture, so I'll write that the place for furniture. China, cutlery and linen, 4,500. Discount received 780. This is an income. Buy, discount received. Debtors 2270. Inner column because there's an adjustment. There's new bad debts. Then there is furniture and fitting 6,800. Inner column there's depreciation 6,800. Then there is advertising 2510. To advertising 2510. Bad debts 390. There's prepaid advertising, sorry, I forgot about that. Inner column because there's an adjustment. Two bad debts. $390. Two bad debts, 390. There's an adjustment. Then loan account, 5,000. Inner column, I will have to write it in the inner column because there's outstanding interest. Loan account is 5,000. Rates 3350. Laundry, postage, and telephone. I think I can just take this and write. Two rates, then two laundry, 2220, two postage and telephone, and two insurance. The last thing is stock, which is closing stock, 3,500. Closing stock, 3,500. Okay, so we have done all the postings. Now we move on to the adjustments. Outstanding salaries rupees 200. So add to salaries here. Add outstanding salaries 200. That comes to 22,960. Next, our outstanding salaries will also go in the balance sheet. Leave a line for interest on loan. Outstanding salaries 200. Then we have advertising paid in advance rupees 500. So less prepaid. Prepaid 500. So actual advertising expenditure for this year is 2010. Okay, because out of that, part of it was prepaid. So this goes as an asset because it's already paid for next year. Prepaid advertising 500. Next we have write off rupees 200 of debtors as bad. So this become due bad debts. Add new bad debts, 200. So that comes to 590. This comes to 590. And we also need to minus this from debtors because 200 worth of debtors have turned bad. So less new bad debts. They're saying 2270 for there are further bad debts. So we cannot expect 2270 to come in from the debtors. It will be less by 200. So less new bad debts 200. That comes to 2070. Then coming to the depreciation, furniture and fittings at 10%. So less depreciation comes to 680. 10% of 6,800 will be 680. So minusing this, we will get 6120. 6120. We also show the depreciation in the P&L account. To depreciation on furniture 680. Then there's depreciation on leasehold premises of 8,000. 8,000. That comes to 42,000 here. On premises, it is 8,000. And finally, China cutlery and linen were revalued at rupees 4,000. So the old value, sorry, I wrote this in the outer corner. The old value is 4,500. The new value is 4,000 rupees. So that means the depreciation becomes 500 rupees. The depreciation here becomes 500 rupees. Okay, so in China cutlery, the actual value was 4,500, but the new value is 4,000. So the difference is a depreciation, which is 500 rupees. So here we have China cutlery and linen, 500 rupees. Then we have provide for interest on loan at 5%. So interest to interest on loan, 5% of 5% of 5,000. 5% of 5,000 will be 5 5s are 250. Okay, I can just write it here. 5,000 into 5% comes to 25. And the same interest has to be added to the loan. Add outstanding interest or add interest. Interest is 250. 250. So this comes to 5250. 5250. Okay. Now we come to the various payments to partners. Partnership deed provides 4% interest on capital. So first we will see that. Now this interest on capital is an expense to the business. Okay, so since it's an expense to the business on the debit side of the profit and loss appropriation account, as to interest on capital for X, it is the rate is 4%. So 4% of the capital, 4% of 35,000. I think 4% of 35,000 comes to 1,400, and for Y it is 4% of 30,000, which will be 1,200. 1,200. 4% of the capital, 4% into 35,000, 1,400. 4% into 30,000, 1,200. This is an expense to the business and an income to the partners. Okay, you're paying, the business is paying them something. So basically their balances will go up. Y had 100. Now with this 1,200, it will go up further after taking this into consideration. By interest on capital, 1,400 and 1,000. Okay. Next we have X is entitled to a salary to 10% of the net profit. Now we cannot do this until and unless we know the net profit. Okay, we cannot do this until and unless we know the net profit. Let's try to find out the net profit. So to find out the net profit, we will have to balance this. So this total here comes to 61,570. 61,570. 61,570. So the two net profit will be 61,570 minus all this comes to 11,850. Okay, 11,850. Now I have gone for closing directly because for this adjustment we need to know the net profit. Okay, now so we can actually you can say two net profit carry down, because this net profit has to be brought down here. Okay, this net profit has to be brought down here. Before I bring down the net profit, I will just pay X, the 10% of the net profit. So to salary to X, it will be 11,850 into 10%. 11,850 into 10%, which comes to 1185. Okay, so again, expense to the business, income to the partner, by salary to X. So it is 1185. Y doesn't get any salary. Y doesn't get any salary. Okay, so all these payments to partners, both the effects, one effect will either be in the appropriation account and the other in the partner's current or capital account. Now bring down this net profit here. So by net profit brought down is 11,850. 11,850. Okay, so if I try to total this, I think that's it. Another thing is, then they've said profits and losses are to be shared in the proportion of 5:4. So how do we do that? Now we have made all the payments, we have shown everything. There's nothing else except the division of profit. So what I'm going to do is 11,850 is my total here. 11,850 is my total here. Okay. What I'm going to do is, out of this 11,850, okay, which is the net profit, certain payments have been made to the partners. Certain payments have been made to the partners. What are these payments? Interest on capital and salary to X. So what remains after all this is 8,065. Can anyone tell me what I'm going to do with this 8,065? Can anyone tell me what I'm going to do with this 8,065? What will have to be done with that 8,065? What will be done with that 8065? What will have to be done? This is actually the final profit. What will have to be done? They've already told you that profit and losses are shared in proportion to 5 is to 4. So this remaining profit has to be divided between the two partners in the ratio of 5 is to 4. So two net profit for X, okay, for X and Y. For X and Y. So 8065, if I divide it in the ratio of 5 is to 4, I will get it as 4481. How do I divide? 8065 divide by 9 into 5. 8065 divide by 9 into 4. 5 is to 4. And here it will be 3584. 3584. Okay. Now this is the share of profit that they are getting. So the total profit of the business is divided among the partners again, which is like an income to them. So net profit, by net profit. So X has got 4481 and Y is 3584. X is 4481 and Y is 3584. Okay. Now, if you see here, Y initially had a balance of 100 rupees. He's got further incomes and plus he's got drawings. Similarly, X had a debit balance. Okay. Then he had drawings plus he's got some income. So after adjusting all this, we will have a new current account balance for them. Either debit, it can either be debit or credit, but we will have a new current account. But if you see, both will have a credit balance. If you see, in case of both, this side is higher. Okay, so this total comes to 7066. 7066. So two balance carry down. This is the balancing figure. Okay, two balance carry down. 7066 minus 2250, we get 4816. 4816, and similarly this side it will be 4784, 4884, 4884, and Y's amount will be 88. Now what has happened, if you see, in case of X has started with a debit balance. Okay, but now his balance has increased to 4816, which is a credit balance. It's going to, if you try to bring it down further, it's going to come on the credit side. Similarly, Y had started with only 100, his balance has gone up to 84 with all the payments that he has received. Okay, and these current accounts are transferred to the balance sheet. These current account balances are transferred to the balance sheet as X, which is 4816, and Y, it is 884, and the total of this comes to 5,700. Okay, and this will give our balance sheet total. The balance sheet total will be 81,230. 81,230.